Hey guys, today we are going to talk about pricing your product and services. We are going to first take an example from the taxation system and then see how this is related to pricing. Now, I'll tell you why taxation to pricing, because a taxation system is basically the price that you pay to live in a country, right? I mean, that is how you pay your bills for the country, and you know that in a very similar analogy to how you pay price to a SaaS company or for a product. Now, to learn more about taxation, we are going to take an example from the Ramayana, where Lord Ram, once when he was ruling Ayodhya, he asked his guru, saying, I want to keep my kingdom very happy and my people very happy, but I have to tax them, and nobody likes taxes. So how do I make sure that people don't hate me for taxing them? So his guru advised that you have to tax your people in a way that they don't realize that they are being taxed. And so how is this possible? So they gave an example of how sun evaporates water. Now when sun is evaporating water, no one realizes from a lake or from a river. No one realizes. But when the clouds give back that water in the form of rain, everybody realizes that and they are rejoiced about it. So it's the same water that is going up and coming down, but when it is going up, nobody realizes. In the taxation world, this is something to do with indirect taxes and direct taxes. Now, indirect taxes are like GST, which is already built in to the pricing of your product. If you buy a 10 rupees biscuit, you don't know how much taxes you paid. You wouldn't buy a 8 rupees 20 paisa biscuit and then pay 1 rupee 80 paisa as a tax on that. You've always bought a 10 rupees biscuit and you don't realize how much tax is there. Imagine this being the other way, where your tax 10 rupees is the price of the biscuit and then it says 1 rupee 80 paisa extra. Now suddenly you start realizing how much tax I've paid, right? It's no longer hidden. Now contrast this to direct taxes, where you've already got your money and now somebody is taking away something from it. Now you've earned 100 rupees and I'm saying, as a government, I'm saying, give me 30 rupees out of this because you've earned a lot. Right? There are three ways to look at it. The 10 rupees biscuit that has the taxation built into this. The 10 rupees service that you took, where you have to pay additional 18% GST. And the third case, where you already earned your money and now the government is taking something away from it. Right? The third one hurts the most. And the first one you don't even realize. In the stock market, if you look at it, there is something called securities transaction tax. Every transaction that you do in the stock market, whether you make a loss or a profit, you have to pay some tax to the government. And then there is something called long-term capital gain tax or short-term capital gain tax, where you pay only on the gain that you've had. Now, STT, which is securities transaction tax, there is no way you can hide it because the exchanges control it and they will tax you in every transaction. And as a trader, one doesn't even realize immediately of how much tax they are paying, because it comes as a cost of doing business. But when it comes to LTCG or STCG, the capital gain tax, people actually realize it, and it pains to actually give that. Now, if you look at it from a pricing point of view, what would work in your situation? Is being transparent a good thing? Is giving rounded numbers a good thing? Or actually showing everything line by line, that is a good thing? Say, let's take an example of bookmyshow. Say a movie ticket is 300 rupees and bookmyshow is charging you 30 rupees as convenience fee, and then there is a 18% tax on that 30 rupees. So that's another 5.4 rupees. So there's 35.4 rupees being charged extra after the 300 rupees. Versus I show you a 350 rupees ticket and tell you to pay the full amount, and the taxes and the convenience fee, etc., will be distributed. Now the second one will not hurt you because you don't even know what bookmyshow is making. After a time, you won't even realize that the prices at the cinema hall is different from what you are paying online, right? But right now you do realize that this 30 rupees is purely profit, and if you have to book say 10 tickets, it's 300 rupees plus taxes. So you might as well just drive to the cinema hall and buy those tickets to save that rupees. This is what we call the convenience fee, right? I don't want to pay for this because this looks like a pure profit that I'm paying. Versus if I change this thing, and most travel sites call it the payment gateway fee. Most travel sites now charge you 150 to 200 rupees after all the charges have been added. It's right before you enter the payment gateway, they'll add 150 to 200 rupees as payment gateway charges, which is actually genuine, right? I mean, they end up paying anywhere between 1% to 3% to payment gateways, and they want to recover that because otherwise they will lose that from the margins. So in both the cases, this tax has been added on top of the regular price. And I'm using the word tax because convenience payments are almost like taxation systems, right? So this tax has been added, but the language is a little different. In the first case, I called it convenience fee. Second case, I called it payment gateway fee. Payment gateway fee almost seems like, there is some cost that I'm bearing on your behalf and I'm just trying to recover that. I remember back in 2009-10 when we launched freecharge, we used to charge 10 rupees extra on every recharge to give out coupons, etc. And we called it courier fee. Now, had we called it convenience fee, it almost would have looked like that this is profit that we are earning, right? Or coupons charges. Again, it made seem like that we are selling you coupons, but we called it courier fee because we were only recovering the cost of courier that we were incurring on your behalf. So suddenly, the psyche of the user is a little different. Again, in direct taxes, indirect taxes, the psyche is very different. Now, let's see the impact of this. Recently, the Indian government announced a 30% capital gain tax on crypto trading, and this thing blew up so much that it was actually discussed multiple times in the parliament. People who are very active in the crypto world, they've actually left India, moved to Dubai. Very large companies, all their employees have moved to Dubai. Now, if you look at it from one angle, obviously Indian government has lost a lot of high tax paying individuals. Had they not charged this 30% as capital gain, these people would have still spent some money, and Indian government would have recovered this money in the way of GST when they take various services. Now, there is one other taxation that the Indian government did is 1% TDS. Now, the problem is charging that TDS is difficult because every transfer would have been considered as a gain, and then people have to pay that 1%. So it's not a very convenient thing to do. Versus if they start controlling or guiding all the exchanges, saying that you have to do something parallel to a securities transaction tax. So whatever fee you are taking, I am going to charge you on that. If you're taking a 0.2% fee, which most exchanges do, I'm going to charge you 0.2% as tax, right? So the fee increases from 0.2 to 0.4, and because everybody is doing that, all the exchanges are doing that, implementing that fee together, the users won't even realize it. That similar to what happened in the airlines industry, right? All the OTAs, they implemented this convenience fee together, right? So we had no option but to click and buy. So similar if the thing, where the cost of, the tax is added to the cost of brokerage, and then there is a single line item that shows up saying this is the cost of doing business, right? And so people wouldn't mind that as much as 30%. Now this actually comes from a different psychology of explaining, of what would people hate more or like more. In first case, I'm saying I will give you 20 rupees if you do a certain thing. In the second case, I actually give you that 20 rupees and then say, if you don't do this certain thing, I'm going to take this money back. It is generally observed that the second case hurts the user more. So they are more likely to do that action because you've already given me something and now trying to take it back. So the taxation system of direct taxes is similar to that, where you've already given me my 100 rupees, now you're trying to take that money back. Versus the indirect taxes, you've already priced all the taxes in the final amount and you are only giving me the final amount, right? So it pains less. Again, this example that I told you is more to drive action from users, where say, I'm going to give you 1 year free subscription, but you have to tweet about me. So let's see if you can use this psychology to create a rewards program for your users. Now, in case 1, you say that, if you tweet about us, we'll give you 1 month of subscription for free. In case 2, we say we've given you 1 month of subscription for free, but if you want to keep it, in the next 24 hours, you must tweet about us. Now, because in the second case, the person has already experienced the subscription, they are more likely to tweet about us because it will be more painful to lose something that you've already experienced. This is almost like the direct taxation system. 100 rupees has already come to your account, now you have to lose 30 rupees. Also in the second case, you are showcasing that we already trust you, saying that we've given you whatever we wanted to give you for free, now we are only expecting a tweet from you. So this becomes a little easier to convince the user. Versus in the first case, where they've not even experienced what we are giving out, and we are saying, if you tweet about us, we'll give you. So, pricing versus taxation versus rewards, but we are using the same psychology of what will hurt the user, and hence what will be the user more motivated to do. Hope you like this, hope you apply to your product. Let me know in the comments. Thank you.